Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Woo. Thanks for stopping by today. Can I please get a sound and screen check in the Bookmap Discord TraderLab chat as well as YouTube? Thanks. Discord's good. Okay, how we doing in YouTube? Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Thank you, Ed, and thank you, Seabass and Repeat. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis to overlay structured trades. The idea of the Trader Lab is it's a community of like-minded traders that have come together to vet and build out a structured trading plan. The idea of a trade plan is to have a structurally built process that gives you a statistical edge. The business of trading is not predicting the next move. Wouldn't it be nice if we actually all had a crystal trading ball on the desk? But the reality of trading is it's gaming. At least that's my opinion, my experience. And gaming is really about, think about how casinos work. And I like to start with this because it sets the foundation for how you build a business. The business of trading is gaming. Casinos only play games that have an edge that favors them. Gamblers walk out with winnings, which is one reason they come back. And also the house accepts the gambler's winning is cost of production and overhead, not personal failures. The only way the house gets to extract the dollars from the gamblers is to pay the cost of production and the cocktails and the tickets to the buffet. It works for them. If we model our business based on another successful model, we are not reinventing the wheel. The wheel and the track already exists and it's proven. Now, how do we fit into a successful business model? It is the games. The games like blackjack, roulette, and the rest of them favor the house. Well, our business, our games, if we want to use the comparison, are our structured trades or setups. So the Trader Lab is based on sharing 60 PDFs of structured trades and an understanding of market mechanics, how the market works, why it does what it does, and how you might get in alignment with it. And of course, past performance is not indicative of future results. The Trader Lab is a community, and it's only by coming together as a community that we can leverage our collective experience, bring all of our knowledge together, and then debate, demonstrate, and inoculate against the psychological and emotional impediments. How do you manage emotional states? How do you get control over yourself? You get it by taking yourself out of a random behavior, but accepting the randomness of the outcome of the market or the interaction with the other participants. If you are consistent, you can measure it. If you're using inconsistent inputs, which creates random inputs in a random environment, that's the old garbage in, garbage out comment, just reframed a little bit. You cannot expect, in my opinion, to go anywhere in this business and certainly not sustain a career if that's your objective. Again, an opinion, but there is a little background here, as you can see from my background, a little experience under the hood. All Bookmap, general disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Grab a pen and paper. You might want to take a few notes. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. If we get into it, we'll do it. If you've been following the stream, this is based on structured trades, and it's available to everyone, as well as the Bookmap Discord TraderLab community, and there's no cost. You don't have to subscribe to some vendor. I am not a vendor. I'm sure there's a lot of value in education, of course. We believe in it very strongly, and Bookmap supports education to the nth degree. However, you have to vet everything for yourself, whether it's a educator, a subscription, doesn't matter what it is. Just make sure you do your homework. If you scour the internet today, everybody, anybody can, quote, be an expert. And you need to, if you've had some time in this business, hopefully you've had enough experience, and we all learn the same way, not to repeat things that don't work, and keep searching for the things that do. I've been up since 3 a.m., so I think I'm a little delirious at this point. So at that point, just so you know. Oh, and a note here. We are rolling over to the September contract. We're currently in June, and this I'm referring to ES, NQ, and whatever else we trade here in other markets. But you always must be doing a rollover. So starting Monday, I will be quoting and sharing the September contract. Please make a note of that. Okay, so let's get into it. Now I want to show you. Now we had news from Japan, which upset the market. And the thing to understand the auction and how it works, the auction takes what it knows, and it basically validates pricing. So it auctions means what's too high, what's too low. Yesterday, this was settlement, and this was the highest volume price in the RTH, and that's called the volume point of control. It's a market profile term. It actually used to be called just point of control. But what that is where the volume was and the accepted price, settlement. So this was the last price, and this is how everything is marked to market, basically based on the settlement. Well, we had news come out and it disrupted the market. Now what happens is either the market reprices, and because of that change or that input, the value is adjusted, or the market digests the news and potentially returns back to where it was. The concept is called mean reversion. And in the last 2-day consolidation previous to this news, let me show you just a little bit higher, I think. Let me just see. Well, this is basically the retail price. So this is your fair price. So right now we're below it. Here's yesterday's low. Okay, and you know what's under yesterday's low? Stops, ETH low, overnight volume point of control. Now here's the thing. We open below the fair price, and let's just look at this now. And the overnight volume point of control, which is all the way down here, was the fair price in the ETH. So this gap between those two prices is an important indication of potential change in value. So that means potentially we're going to test this and maybe yesterday's low, and then subject to what happens, if we come back above here, then potentially if we can come out the top, we can return to what's above us here. So for me, and this is very conflicted, because I was short, I was long, I felt like a whirling dervish. And the hard part, of course, like everything in trading, is the market is very unsure of itself starting out this morning. We had what was called two-sided trade. Not my favorite condition, very difficult for me to trade. Doesn't matter. The thing you need to understand in the real world of trading is that when things align, you are taking trades that have a statistical edge. When those trades don't work out, if you can define what is changing that doesn't support the trade, you need to try to stay in alignment with it. So I will tell you, not every day is a great day in trading. And this is the real world of trading. It's not different than this. And in the TraderLab, as we say, you're going to get the straight oil from the can. Hard day to trade, at least for me. And I've been doing this going on 45 years. And there have been other hard days to trade. And when those days come, and they do, it just means that the condition of the market in my plan, which works pretty darn good over most days, is not, in other words, the plan and the conditions are not in alignment. And if they're not in alignment, I take losses. And when I take losses, just like you, I have loss limits, I have protection, and I also have guidance that tells me when things are not working right. Unfortunately, I don't know that until hindsight. So I just keep doing my thing until I recognize that this is not making sense as far as aligning. So that's what today is for me. Don't mind telling you that, because I'm not here to show you anything other than the real world of trading, at least my world. I'm sure there's others who buy the high, sell the low. They do it all the time. Me, not so much. So let's look. Let's look at this now. Let me give you some statistics too. And so we're opening lower inside of yesterday's range. Here's a couple stats. Write these down. And you're going to see how statistics might play into this, and also kind of why I had a certain lean, which is primarily to the long side initially. And then it started flipping around. So then I was getting short and then getting back long and trying to find outside edges. So for me, primarily, it was outside in, what's called mean reversion trading, try to trade back into these higher prices above. So write down some stats, and you'll see how stats might be useful or might not. Stats are one piece. They're not the piece. They are a piece. So the probability of when you open lower in range, so getting the overnight volume point of control down here, and the RTH open is here. So we have a probability of getting here around 83%. And you have to vet these for yourself. Past performance, not indicative of future results. Getting to the overnight mid is 83%. That's there. So I have this and this about the same probability with the open here. Getting to the previous close is 72%. That's this. You see? Getting to the previous point of control, 70%. That's this. So this sets up what I'm looking for starting out. And I'm conscious that we might not, and this is the ETH low. Let's look at that stat. 66% probability. And getting to the overnight high, 49% probability, and the previous low, 53% probability. Taking out the first hour's low, 59% probability. Taking out the first hour's high, 69%. Everything is statistically skewed up other than this, which is high probability. And why would it be high probability? Because this was a retail price. The nature of the market is to try to find what's too low and return possibly to what might be, which was previously retail. So that's what sets up the long scenario for me. So I have to go over that so you know why I'm leaning a certain direction. And the higher time frame context is up. So, it is what it is. And of course, we have a gap under us. That adds a little bit of excitement too. So let's see. That's before the day starts. Now, I know what happened overnight, and I certainly know that everything is a bit freaky, So, RTH open, developing volume point of control. This is called a variable high volume node. I mark these. And what I try to do is track volume. Now, what you're going to see today that you don't see probably too often when you follow this stream is difficulty. And I really want to reiterate that difficulty or lack of alignment under certain conditions, which is only knowable in hindsight, is part of trading. So I'm looking at this. This is my support. Market comes up, and I'm thinking, well, this. So I want to get long to get, I want to actually look at who takes control to get long to come across. That is my plan. And I have a high probability of getting here. So the market opens, I get my chop chop. Now here I'm conflicted. I'm going, is it a long? Because we have rejected this already, or what? And I'm going clueless. So let's look. Market opens here. I roll up, I roll back. This is my support. I come up. Let's watch it very closely. And I'm looking at it and I'm thinking I want to get long. VPOC migration. I come under here. I need to come above. So I'm very mixed right in here. Why? Statistic and possibility, statistic above. I'm kind of in a sandwich of statistics here, right? I have the overnight mid, wherever that went. I think it's buried. And I have this. Let me just look here a second. Make sure it is. I think I lost it. It might be covered up. So I'm not sure. I'm right here. I'm mixed and I'm teeth are chattering. Liquidity comes in the book. That is it. That presses. Right here, it breaks below this variable high volume node. This sets up a short for me. And I couldn't tell you. This is what gave it to me, the reaction. And this was my support. In here, I was very conflicted about the whole thing. Because whatever way it was going to go, I have to go with it. That's my first trade. So I'm going, okay, got you now. Ever think that? So let's watch the trade. So that's the first one. And I want to get long. You may wonder, why are you getting short to get long? Because I look at shorts to get long for alignment with what I think might be the context, which is up. So where does this fail, right? So what do? We come up right here. So I get scaled. We come up. These guys pull. Come back up and test. Right here, I'm thinking the trade is dead. And it is. I get taken out. Okay? So now I'm going, maybe that was it. And this is where I start looking for longs. See? VPOC migration. So right here, I get VPOC migration. I take a long here, and I'm looking for it to continue. I'm thinking we're done. And here. And this is resistance. So what I do is if I put it, and see here, there's an absorption here. I'm above the mid. I'm above the VWAP. And now this is too low. This is TraderLab sequencing. So what I'm doing is I'm reading order flow. I'm seeing the sellers get trapped here. The passive side was absorbing here. Okay. VPOC is here, which says this is retail. If I shift higher, it says too low. So I'm following a process. I'm playing my game, and I'd love to tell you that, it's all wonderful. It is until it isn't, and that's trading, so I can't tell you more about it than that because I have no clue anytime I put a trade on. So I break above here. I'm out of my short, and now I'm long, right? Long, scale, going for targets above, pull back here. Now I pull back here, and I'm going, this is still okay. This is an add to here. Scale, holding. Not so much. Now where do we go? And now with this, I could not get short. I just got taken out. And then where do I go? Here. And that's off of the Michigan. So now I have yesterday's low. So now I'm going, well, what? I'm not going to tell you what I was saying. I'm just going to say what's going on, right? So the report, I get taken out. It's 9 a.m. I'm back up. This is my variable high volume node. I'm looking at this level to potentially short. Why? Because this right here This was, in other words, this was too low. This is now too high. This shifts down right here. And this was the report. Just no way to play this. Pulls back here. This is where I'd be looking to sell it. Doesn't get there. Down, hits the target. No way in for me. This is actually a place, I should say. Right at this point, I stood aside. This is a short here. I didn't take it, just telling you. Didn't do it. Hindsight would have been a good trade. But this is what I was looking for. I got the retracement here, the break below. This is a structured trade. I did not take it back to here. This is a trade, so I did not take that. You might wonder why, because I had somebody at the front door. So wasn't even aware of it. So this now is our variable high volume node, and this is our variable high. Let me mark these. So let me show you these. Now this is hard. What was hard was this whipping back and forth stuff, the volatility. So it's hard. And you really have to get patient in this. So this is too high right there. Miss it here. This is retail. Boom, boom, short. And then we're looking for the first hour's low, which is here, which is set at 9:30, right? Whatever the low is, which was there. Take it out, come back in. And then you got yesterday's low. Come across. This is what's so hard. Now this is resistance, variable high volume node. I got to label it. You see how this volume point of control is flipping around? It is really because the market's crisscross, crisscross, crisscross. So it's a two-sided trade. Now I've been wanting to be long, which for me is what I suspect, underline, is ultimately how this will resolve. So, but I have to follow the yellow brick road. Once I see the control, I have to be thinking shorts. But I cannot forget the higher time frame, which is the possibility to squeeze these shorts out or not. You know, that part clueless. So let's look. So here is too high. Here is too high. I come up here. Right here, I take a short. And where am I trying to go? To here, to here. See where it comes? But what happens to me? I get a scale, I get to mid, and I'm looking for, it has to clear mid. It does not clear mid. It breaks high. It pulls back. Now I'm going to tell you what I did here, and I feel like I just want to beat myself with a broom. So short to here, I see my buyer. I pull back to my volume point of control. This is a long. I'm going for this high scale, and that's the end of it. And I just feel like I was run over, and a lot of trades, and I just didn't get anywhere. You know, worth mentioning for the wear and tear and risk, just the nature of it. Yet, in spite of it, this is what's going on here. Auction. This is just rotational trading. So it's kind of, you can trade it from both sides or you pick a side. I am on the longs. If I was sitting here, long right here, not a trade recommendation. Absorption, mean reversion. I posted in the TraderLab that this is a mean reversion day. And that is outside in trading. If you trade inside, it's dangerous because of this kind of stuff. This is the mean. So for me, I'm trading levels. Here is the level. You see it? Let me label it. And I'll tell you, it's kind of like, I post in there, it's like spin the bottle without getting pissed. It's a hard trade because of this kind of thing. You know, you try to get positioned, you get taken out. You know, so you have to be disciplined. So what I'm seeing here is too high, where's too low? Mean reversion, cross, too high, then come back, cross. So it's outside in trading, And let's, in this time frame, maddening. And if we extrapolate this to fractals, this is the same, this behavior from here to here is the same behavior from here to here and potentially there in the next higher time frame. So you can see, I think, maybe, and maybe's all you got in trading. Remember, the outcome of anything we do in this business is random because we don't know what other participants will do, and they all have different time frames, agendas, and who knows. I am looking, and this was my plan coming in today for this. So I'm trading multiple time frames as you think of them. Outside in is mean reversion. The mean is that in the developing time frame. In the higher time frame, this is the mean. So I'm playing the same process in multiple time frames. Does that make sense, guys? Kind of nutty, but that's what it is. Tony, I'm not reading any. If you're asking for IB continuation, are you talking long, short? What from what side? The IB continuation trade is a directional trade when you have quite a breakout of balance. But since we're rotational, I think that would be a hard trade to take unless we get rolling and you see the short starting to get squeezed. So far, it's two sides. So the trade is here to here. After that, it could just roll up and roll back on itself. It can keep doing this. My plan, which of course doesn't mean anything, it truly doesn't. You see what we're doing? Rotation, 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 rotation. So this is a mean reversion plan, which is only, I don't trade in the middle. If I do, I can get abused with the best of them. I want to try to find outside edges. What is at outside edges? A couple of things. There's swings. This is an outside edge. This is an outside edge. This is retail. This is a long. I can break below it and come right back to this. This is all maddening. So we'll see how this plays out, guys. I'm going for this. You know, it's kind of like, and along the way, anything can happen. And the market never has to do that. It can fall out the bottom and keep going. But let's look at what we've done so far. We got to yesterday's low, I suspect, right? And where's the low of the day, guys? For some reason, I'm not seeing it on my chart. Could you guys confirm low of the day? Hi, Dennis. How are you? TraderLab, what is today's low? I had a little data issue here, so things are a little weird. 5408. And yesterday's low? Yesterday's low, guys, please. Anybody? Approximately the same? Okay. All right. To me, the failure down here sets up the IB failure, which for me, very difficult because I was having a very hard time with this. But this is a structured trade in TraderLab to get long and come across. I know some traders will take this in TraderLab. But for me, I was not here to be able to take that either. So this, though, this is my long here. And this is the area for the long coming from this side. So this retracement is coming into an area. Now, they're not rocks of Gibraltar. Here's another thing. This was the retail price in the ETH. Now we've auctioned it from both sides, right? This is the lowest level of high volume in the developing time frame. You'll notice it's approximately the same area as the overnight volume point of control, which is this. If this becomes too low, I get liquidity comes in. I have 1,000 buy icebergs. See the order flow? Sell stops come out, absorption. These shorts are trapped. That creates the long. Then the scale, now you have mid, VWAP, VPOC. It's up to your plan to scale. It could be ahead of the mid, ahead of the VWAP, or here. For me, I'm trading this. Why would I be more confident in the VPOC than worrying about the mid and the VWAP? Because of this. And because of that. And because of that. And because of the icebergs. This is how order flow gives you potentially an edge over the mere mortals. And of course, like everything, the outcome of any interaction with the participants is random. Here's the buyers, and I'm seeing absorption here. Sellers are right here. You see the liquidity, selling icebergs. When you see this liquidity in the book, that is limit orders. Who uses these? Well, these are limit icebergs. So when you see us come up to this level and you see absorption, what we need to see is, are we able to overcome this absorption? So often what the market will do is rotate, and then either we're on our way back down and stay in the rotation, or we're going to come above this after the reaction. If we come above it, then there's more upside. Let's watch. Now we're going to watch the algos. This is algorithmic behavior. You can't do anything with this. You can look at it, and it's not here for anything more potentially than to influence the book. So you'll see them stack, pull, or put and throw a stack here to suck retail traders in, pull it, and then flip it and push it. All kinds of things happen with this. So resting liquidity has much more meaning than this stuff, okay? But it's all, now this is important here. You'll notice we had buyers here, and there's more sellers here, there's more volume. So what we have to see is these buyers are stuck, this buyer got no love, and I have sellers under here. That is suggesting potentially return here. Now that doesn't change my overall view. Now if I can clear this, it opens the door. So I have buyers stuck here. There's the delta. Those are the buyers. I'm now below this. So that suggests downward rotation. It's not a way, it doesn't mean you get short unless it's part of your plan. For me, it means rotation. My plan suggests long from out here, scaling, and helmet. And I also know this right here, micro high volume, is too high. Because this is, let's look, high of the day. And in this fractal, there's volume, and it was too high. So if this is too low, this is retail, I can come back here. There. If I don't clear this, then I rotate. So this is rotational trading. It's terrible. It's not terrible. What it is it's frustrating because it's going to trigger a lot of emotions. You know, MFE evaporates, and it depends again on time frame. What I always suggest to TraderLab, developing traders, and it's a minimum 2-lot configuration, is you want to get risk neutral. That's job number one. And then you want to manage your trade. If this thing comes back here, if you don't move your stop, you keep it here, you'll scratch the trade. If you have a trade management process, you may be running under here or under here. You know, you get something out of it, you get taken out. Let's watch this behavior here. Remember, this is resistance right here. Notice this. Let's see what these guys do. This is algo driven, guys. So we're going to watch. Now remember my thesis. And by the way, having a thesis means nothing because it's all random. This is my next resistance here. And I'm going for north. clueless, of course. I have questions. I'll take a look. So I'm on the long side. It's not. These are not trade recommendations. I claim to be clueless, not ignorant, but I'm in a random environment. I cannot predict anything. I cannot tell you where the next rotation will be. I cannot tell you anything. I can suggest to you what might happen and where it might. I don't know how it'll resolve. I do know. Here, let me show it to you. I'm going to show you a fractal if I can do this. Right here, right there. Here, I'm going to try to mark this for you just to show you getting the microscope out and see if this might be of interest to you. Well, I'm going to just throw a line up here. Right there is micro high volume. You'll see that we chop, seller, buyer exhaustion, selling iceberg, sellers take over here. We pull back and test the bottom of this volume here and fail. This sets up a short, which may or may not be your trade. It's called the IB failure. It's a short, mean reversion trade. It's this. Back to here. Just going to show it to you. And then we come back here. So we have mean reversion outside in. So it's two-sided trade. This is the long, back to here, and this is resistance. And I'm going to show you another level, which is now more volume, let me just show you in the fractal, right at just above that variable high volume node. These are areas, they're not rocks. No precision in trading. Wouldn't you like to have precision? I would like that. Gave up on that a long time ago. Because our natures, we want precision and certainty, and not so much. Where's this? There's the high volume node. Look to the right. You see the little node sticking out. So this is my resistance. This is my long. This is my scale. And now let's get back to... So in this trade, it would be to here, scale here, hold. Or running a 2-lot, long here, scale, trail. And, that's the thing about a 2-lot. If you're running 3s, here to here. And to here means ahead of here, which is aligned with this. So this has alignment. So this is my next target for the runner on a 3-lot. And then we have what we call the Hail Mary pass, which is this. Gap to settle trade, and this, about a 70% probability. Not past performance, not indicative of results. Is this making sense? This is auction market theory, and yes, wear a helmet, and yes, you will get abused in this condition. But the market tends to behave at times in certain ways that if you codify them and you vet them, you will at times, and that's the whole purpose of this stream, is to help you understand market mechanics. We can't predict anything. These guys pulled. Now what we want to see is what happens here. You see a buyer, there's a seller here, and the buyer's absorbing. If we keep going, now we have a seller selling iceberg. If we can push through the iceberg, this is the next scale, not a trade recommendation. Now we want to watch the behavior. And guys, I'm not calling trades. I'm very proud of the stops I take. I didn't say I was thrilled. I just said I'm thankful because it keeps me together. It affects me psychologically, but it protects me financially. So that's kind of how I experience it. I still am emotionally attached. I'm just kind of acceptance of randomness and no control over these outcomes. So your scale is right in front of this. If you're running a 3. If you're running a 2, you could be done with this trade here, or your choice is trade management, but you have to accept the potential of coming back and staying in the rotation. I mean, that's where trade plan comes in. So this is your next scale. So the scale would be, you'd be done here with the scale. So if you're running a 2, you could be done here. or you have your vetted trade management process and you're sitting long from here. And if we come back out here, take out this high, again, this is our target. Any questions? Is this logical? Get something from this, guys. Please give a thumb up in YouTube. And this is Not Easy Trading. Hi, Patrick. Good morning. Are you going to be on the links this afternoon? Remember, everybody, we are rolling over this weekend. Be sure, I'm going to be trading the September contract ESU 4 or ESU 24 effective Monday. The process is the same. Nothing changes except the price you're going to see, the adjustment for the spread. Is this logical? Can you guys see how the auction operates? Now, the thing about an auction is its job of the auction is to try to determine what's too high and what's too low. And in the developing time frame, the perception of value changes. So we could think it's going up like I did this morning. My plan's to get long. What did it do? It went down. Well, what do I want to do with it going down? Well, I'm going to take the shorts. What am I going to do then? I want to get long. Not easy, because where do you get long? Isn't that a great question? I mean, that's part of the mystique of being a trader and operating in a random environment. How do the casinos extract dollars from the gamblers in a random environment? They don't know if they're going to have 5 losing hands in a row or if they're going to have 5 winners. They don't know if the next hand, which is random coming out of the deck, or how the gamblers play their cards, is going to work for them, for the house, or for the gamblers. They don't know anything. Do they change the game because they lose the last hand or the last 5 hands? They do not. What do? We skip the next trade. We move our stop to break even when it's not in our plan because we're being managed by our emotional states, not by our business plan. The TraderLab is about helping you differentiate these things and understanding how destructive it is for those who want to have a career in this business to fall victim to their emotional states. And the thing about emotional states is they are chemically induced. It's part of our fight and flight mechanisms, great for survival of the species, not so good for the trading, right? So because trading, we are pushing back against this instinct, this wiring of self-preservation, and it extends into everything. Our brain cannot differentiate from taking a stop or loss to getting hit by a bus or grabbing a saber-toothed tiger by the tail. It does not know the difference. It's just wiring, primal wiring. You need to understand your wiring so you can find a way to manage it. You can't stop it. I tried for years to I thought, like, remember Spock? I thought he really had an edge for trading because he did not have emotions. And I was trying to at the time, get emotions out, where I would not be emotional, where I could be strictly analytical. It didn't work. In spite of I went from rubber band snapping on the wrist to considering cattle prod or shock collar behavior modification. I could not suppress these chemicals. The more I researched to understand what generates these behaviors, the more I understood that the answer didn't lie there. And intention and willpower does not supersede the wiring. So you could have all the intention you want, yet what happens when you move the stop? And also, what about that voice in your head? That language, the chatter in your head? I call that hide. The one that says, oh, this trade is let's bail out. This thing looks like your stop's going to hit. Let's get out. And it doesn't hit your stop. What is that voice? It's the same thing. It's primal. It's that primal fight and flight thing. So if you're in this business, part of your job is to journal your trades and your feelings, because you're going to see patterns in your feelings. Your feelings will change, not based on the current trade, but the one that happened the last trade, the last stop, or where your P&L is for the day. It's going to impact everything you do. But professional traders do not operate that way. I think we can learn a lot from them. This is what TraderLab's based on, bringing an understanding of what this business is and the pitfalls that and the things that really will undo us and take us out of the business. Most retail traders don't understand what this business is. And most retail traders are using canned plug-and-play indicators that any software package has. Those indicators, and indicators have a place, by the way, have been gone through by everybody on the planet who's walked in your shoes. There's no secret sauce. Absolutely not. The quants at the hedge funds and these bank desks, all these guys, PhD physicists that you are trading against, I want to suggest, since I know a bunch of these guys over the years, and some of them are like rocket scientists. If they weren't in the financial business, they could land something on Mars. No problem. I mean, beyond, that kind of intellect where they're almost like you can't have much of a conversation with them because they're just out there, brilliant, actually. And that's who you're competing against. I'm going to suggest that little plug-and-play software package with all the little standard boxed indicators it's not the answer. The answer lies in understanding market mechanics. Strip everything away, and then get back to the fundamentals of what makes the market operate. Your market does not operate on your indicator. And don't get the wrong idea. I think indicators are fine. The problem is retail traders start with indicators. They don't understand how the market works. If you understood how the market works, you would know which indicator at what time, at what place, aligns with the current condition of the market. That's a lot different than just thinking the indicator is the market. It is not. It cannot differentiate from directional to rotational trading. In the TraderLab, we have different plans for this condition, outside in trading. And what about our line right up in here? Now, where'd we go? Did we one tick the high of the day? Come on, right? And where might we come? All the way back here. I don't know. It's not for me to predict. My job, put the trade on, get risk neutral. I have targets here and higher, and then trade management. If I get taken out, then I'm out, and I look to put the trade back on again. If my bias is to the upside, and of course it can fall out and make new lows of the day and fall into the gap and everybody jumps out the window, it's all possible, then my job is to manage the trade. The trade gets taken out wherever my vetted process says, and then I'm going to be looking again, unless things change, to be getting long because of my higher time frame fractal. What you have happening here is two-sided trade, right? So this is what's called mean reversion. So I'm not going to take the shorts. Not saying you can't. I'm just telling you about me because I have a long bias based on the higher time frame, and my statistics are 70%. So there. That's it. But this is where your trade plan comes in. Long, scale, and then either done, or you're holding, and then you're going to be taken out on trade management, which is all fine. Long from here, even if you didn't get out over here and you just get taken out, and now if we revert, we're coming back here. This is what is mean reversion. So if you know you're in this, your plan would be, if we don't keep going, now you're coming back here. And you could be short here, by the way. Forgot to say this. I'm a little multitasking. This is called the IB failure or IBF. It is the same trade. Let me show it to you. Is this. The short to here, this trade up here is the same. It's a short, and I missed it because I've been up since 3, so I'm kind of drooling a little bit. Back to here, but you don't know that. So here's the deal. You come out, you're looking for a continuation. You fall in, it's mean reversion, the mean. You come out, you get long, you come back here, that's the mean. You come outside, you fail. It's called IB failure. It's a structured trade. You come back here, and potentially you're going to roll down here. And then it's back and forth, back and forth. Let's see what it does. See, mean reversion, not a recommendation. this is important here. We want to watch this here. Possibility is the following: push off here, come back to the IB high, or come back here. This is not a place to initiate. This was the place to initiate. This might only come back to this volume, the IB high, and then rotate down again and come back here. This is dangerous. And it's not that if you're an aggressive trader, you could take a long here. The problem is, let me just give you a sense. You see this high volume? That's resistance. You might only come up to here and then fall out and come back here and back here. I'm just giving you the sense. Hard trade, this is a hard trading scenario here. So we'll see what it does. Now, the thing about this is, if you understand the condition of the market, you can trade this from both sides, or like I am doing, and I'm not saying this is the best idea because I don't know, I just make a choice. And since I want to be long, because my higher time frame context is long, and the bottom can fall out of this, remember that, I only want to take the longs. So if I see a short, here's how you might consider this. You take the short if you're skilled and you have a lot of time in, so you recognize this behavior in a timely fashion, or you exit your longs because this is a short trigger and you only take longs. So you're using the short as exits, not as initiation. So this is a short. This is a long to here. This sets up a short, potentially to here or to here. This shifts is a problem for the short, you see. So, but I can't get long here. I need to be long out here. If I get long here, I just want to show you the structure. I can come to the last area, or I can just might only come out here, IB. So I have no range. I cannot take this trade. There's part of me that, the FOMO master says, get long, get long, get long. But I know this is, if I fall under here, then this, and the stops at VWAP and mid. If I don't get under here, I can keep going. So I'm okay with that, but I cannot initiate here. And why? This is too high. There's my high volume right there. This is my outside edge where the sellers took over. I might not get past this volume here or this volume here. So these are resistance areas for me. Let's see what it does. This is trading in fractals, and this is not an easy day to trade. Not that any day is ever easy, but some are clearer, and it's just what it is. So let's watch the behavior. You guys will watch with me. Let's look in the order flow. Liquidity comes in the book. 59 sell stops come out. This is when your broker sends you a gift basket. Liquidity comes in here. You see the reaction to the liquidity. Liquidity is sitting here. Liquidity is over here. This is resistance, and then resistance, and then that's it. So this is kind of our resistance. Let's just see what it does. You can learn a lot if you mark out zones. Part of understanding auction market theory is what actually happens. What is an auction? It's simple. Trading, we think trading is complex, and it's not complex. What trading is random, and we interpret that as complexity. It's not complex. We make it complex to fight the complexity, or randomness, I should say. So we create complexity, and our rationalization for difficulty is really randomness. So we make it complex to fight against the randomness. All we've done is create more randomness, because now we are random in a random environment. Casinos are consistent with anchored inputs in a random environment. So that's our model. So we need, in my opinion, to be consistent so we can measure it. Resistance, liquidity. So let's see if we come back. This is why I can't get long here. Now the auction, it's not complicated. It's basically chop, chop, chop. A consolidation is an auction. And what a consolidation is two sides basically going what's too high, what's too low. I consider it shopping. It's a great way to just think about how the market works is it's made up of shoppers. And if this is too high, we will leave it. It's like a store. They go here, chop, chop, chop. I'm not paying that. They leave. We come back and check the price. If it's too high, we leave. If we come back and check a price and it's too high, we're under here. Now we're under here. We come back and this is too high. We break. That's too high. We're under here. And remember, this shifting up suggested back here or here. It doesn't have to, there's no precision. Now I'm coming back here. That's why it's only outside in trading. Outside in trading. Now, if you don't take the short, you exit the long, but you don't get long here. And in TraderLab, there's a lot of confusion because when you're in mean reversion, it is in the quote mean reversion rule book. You do not take trades in the middle. You target the middle. You don't execute in the middle. So that's why here to here that's what's mean. This is the mean, so it reverts and returns. This is like shopping in a higher time frame. Oh, it's on sale. Retail. What's too high? I'm not paying that. We run out of buyers. Then what? Well, let's come back to retail, which right now is there and there. And then maybe outside again. And then maybe back here. And this is rotational trading. At some point, the way this tends to work is this two-sided operation here. There's volume building up inside of this, and there's buy stops at the top that side and sell stops underneath. At some point, potentially, maybe today, maybe never, it's going to break out of this volume. And the higher time frame suggests it'll be to the upside, but it can be either side. I'm trading towards a higher time frame fractal, so I'm geared towards the longs and not the shorts, other than potential mean reversion trade. In other words, if I am in two-sided trade, I can be shorting this down to here and getting long, or I can use the shorts to exit the longs to put the longs on again. Same thing here. You see, take them out and put them back on again. If it doesn't come out, I'm out, And I have other trades I can take to get long again if I need to. Is this making some sense? I know it's probably very confusing, and it may even seem contradictory. What's contradictory about it is when you trade in multiple time frames, which is what I do, and I always talk about this, except I don't call them time frames, I call them fractals, because the clock is not determining these rotations. It's the behavior of the participants. So how long did it take for this to be created? I don't know, a minute or two, What about little microstructures? Like right in here, that could be seconds, and I can read it. So I don't wait for a bar or a clock to determine my structure. My structure is based on the behavior of these participants right here. Right here, this was absorbed by the passive side. I don't know it until I break low. And now I have my volume here. This guy potentially is under the bus. They were absorbed. Where's my buyer? Now, right here, I don't know. I see my seller. So in this volume right here, right there, I see a buyer. Where's my volume? Sellers are here. I see my buyer. Where's my buyer? So they are absorbed. Sellers take control. Now, I don't know because if this comes up over here, then these guys are stuck. And I break away. Right here, I'm reading a short. And against this, my stop would be here if I'm trading the mean reversion. And this is where we might go, remember. So it's two-sided, okay? Does this make sense, guys? And where are we going to pick? Here. And where's the stops? Here, here. So VWAP and mid are not places that I initiate. There are places that retail traders keep their stops. Now, the next level to consider is this one right here, this. So and I don't like the fact that the VWAP is here, but it's a level. So this area here might be an outside edge. So I've got to watch it. This is what makes this trading so dangerous. Here's what I know also. Write this down. Think like a retail trader. Don't act like one. Where do retail traders do? They buy the VWAP, they buy the mid. And where's the stops? VWAP and mid. And what we might see here is the following. A rotation from here to there, or a rotation and then stop flush, or none of the above. And the point is, I can't predict it. It's not my job, but I anticipate it. So if I see buying here, this buying, if it happens here, or at the VWAP, and you see this guy here, this liquidity, everybody sees it, we may only get a bounce. And then they pull and they flip. It's a possibility. There's no prediction, right? No way to know. So let's watch the behavior. We'll discover it together. Questions? And please give a thumb up in YouTube if you're visiting. I appreciate you dropping in today. Remember that there are 60 PDFs you can download in the Bookmap Discord TraderLab community, plus a library of webinars on this process. Today's not pretty, and it's not easy. These are structured trades, and in rotational trading, it is difficult. And the hard part about it is it's called mean reversion, and I always talk about mean reversion. It's my least favorite condition because where's the outside? Because you need to identify an outside edge to operate in this. You do not want to operate here. So let's watch. I'm anticipating maybe a little bump here, and then a flush stops. So let's see. So I cannot buy the VWAP, and I certainly cannot buy the mid. So when I'm trading mean reversion, these are areas of potential reaction and targets, but not places to initiate. This is important here. So I'm considering, remember, potential from here to here, but I cannot take it because of context. So we'll see it. So here we have buyers right here at the VWAP. Watch. If you're a mechanical trader, that's one of the problems about not understanding something called context. Mechanical retail traders just buy the VWAP or they buy the mid. Now it can come back here, but I also know there's stops here. So I have buying here. I have no selling under here. These sellers were absorbed by the buyers. Let's watch what happens. VPOC migration. Not so good for the buyers. Let's see what happens. This is now our resistance. Let's watch it. The best this trade would have would be there, and I can't take it. In my plan. Doesn't mean it won't go there. See? But that's not a trade I'm going to take. Look at the range. See? So that's not my trade. So not part of my plan. So I just sit here and look at it and hide, who whispers in my ear, I should have taken that. You guys have that voice in your head? I do. I ignore it, but I still hear it. So this is where this might go. It's not qualified for me in the context, so I have nothing to do. And this is where trade plans are important because even though it can go here, this is the obstacle for a long. And for me, more likely, not a recommendation or a quote prediction, because I have no idea, it's going to take this out and this out. We'll see what it does. I did see absorption here, okay? And I see a lack of sellers here. So that doesn't mean it won't come back here, but it can go there. We'll see. Questions? And how about a thumb up? And if you're interested in downloading those 60 PDFs There's a link in the bottom of YouTube. You click on that. It'll bring you over to the Bookmap Discord server. There's 60 PDFs in the TraderLab you can download. There's no cost to access TraderLab or be part of the TraderLab community, and a library of webinars so you can see this process. So this is the VWAP, the VPOC not qualified. This is your resistance. So I have no trade. I'm letting you know this is where I think it can go. And if it keeps going, I have to find another way in. But in my plan, I cannot initiate here. I hope that makes sense. You notice how this thing is bouncing around? That's because we're two-sided and we're crisscrossing this here. So what's happening is the volume is shifting. This is an active auction, and it's very hard to figure. Other than my higher time frame lean to the north, this is not a place I can trade here because we still have the potential to come down. I think I saw a question here. Chop Fest. Yeah, I'd say it's a Chop Fest. What is this? Do I see the questions? Mr. Garcia, thank you for the question. There's no cost to access the Bookmap Discord TraderLab community. And it is really based on structured trades and vetting trade plans. It's not about this random behavior. It's about a plan that gives you an edge. For me, there's no edge getting along here. So I can't take this trade unless I'm just making it up. And I can tell you that's not, it's edge. This does not have an edge. And here's the thing about randomness. When we start trading, we see patterns, and even the brain sees things but that doesn't mean it has an edge. This trade here, VWAP, which is a trade in the TraderLab under different conditions, is a TraderLab structured trade. It's not in this context. Yet, of course, it works at times, like here. Now, the thing about it is, in this context, does this have a positive expectancy, or is it a losing trade over a large sample size? See, that's how you determine what trades you take. It's not this one outcome. Because, yeah, this time it worked. Doesn't mean it'll work. But out of 30 times, maybe it works 10 times. Well, then you can't trade it, you see. How do you know that? That's part of when you come to TraderLab, this is what we share. And then it's up to you to find where your edge lies. If you can pull an edge out of this that's positive, then that's your trade. For me, I don't do it. That doesn't mean it won't work for somebody else, because I'm trading a little differently than most traders. Well, not most, but many traders do. I just kind of try to put the thing on and go for the bigger. So I use the shorter time frames for alignment and scaling, but I'm trading. And I use the concept I think of that describes this as like a Russian doll. Russian dolls are the larger one going down to the little ones. So I'm trading inside the big doll. The big doll's up here. And the little doll is microstructures. Same thing, the high volume, which gives me my micro behaviors. Outside to micro behaviors, wherever they are. Back in, mean reversion. Back outside. And then I'm still trading to this. So I trade in multiple time frames, as you guys think of it. But I'm using no indicators to do it. I'm using the behavior of the participant. So that's what's different about what I do. I don't have indicators. I don't use them. So what I found is I can execute on a much more timely basis of if I'm using order flow. for example, right here looked like a long, right? And I anticipated it would come back here. That's as far as I would go with it. And I can't take the long because if I come back here, I can still come back under here. So and notice where we are. I have no trade here. So I'm just hanging out, you know, or long from our last long, which is here, and the stop stays under here. This is a whole thing you've got to research. This is structurally valid. This is a structurally valid long. This is a, do you feel lucky, as Dirty Harry said, because that's what this is, luck. So I cannot trade this. I'm making a point of this because it doesn't matter. What matters is over time, if I take this trade, what's my probability of getting risk neutral in this range, which is only a couple points, and then break out and keep going without rotating back in and taking these stops out. Now, I can't tell you that, but I can't take the trade. I don't mean to keep repeating it, but I know that there are going to be some of you that say, well, why didn't you take it this time? Because I don't have an edge. That's why. And I'm not saying you can't have an edge. This might be one of the better trades you vet and you find you can trade it because you've defined conditions that fit this long. I also am long biased, but trading is like real estate. In a rotational trade, this is the outside. This is not. This is inside. Does that make sense? So that's why there's no trade. Tanya, Bookmap's not an indicator. There's no buy or sell signals. It's an order flow tool. I call it the tip of the spear. In fact, if you come to click the link in the bottom of YouTube, if you watch the primer webinar I did, and it's available at no cost, in the whole library, there's like 36 of them, and they show you a lot of stuff, some of them up to 4.5, almost 5 hours long of real-time narration. I'm very limited here as far as how much time I now have available to stream, because there's other education that Bookmap is interested in, having traders get a smorgasbord of education. There's not one way to trade. I will say if you can't measure it, then that it doesn't really have, it's just noise to me, but that's a personal opinion. Everybody kind of finds their own truth in trading. So I can't trade from the inside. But order flow, this is not there's no indicator here in the sense of buy this. My thesis is based on how the market works. Bookmap didn't say buy here. My understanding of market and order flow is what told me to get long here. And my trade plan. That's why, and these are the tools. Now there's this, you see this happening here. You see absorption here, and I got absorption there. Why wouldn't I buy it there? Well, because that's not the location. That's the mean. If I'm coming from outside, this is like retail. Well, what does the market do if it's a shopping experience? What's too low? And where was too low in the volume? It's right here. That's alignment. And in the trading business, at least for me, this is a structured trade. So this has an edge for me. That doesn't have an edge, but it looks the same. You see what I'm saying? It's how do you deploy the tool? Well, the tool, in my opinion, is deployed on a chassis. So it's a kind of a priority of inputs is the way I think of it. So I know this is too low. I can't buy it here because I'm in the middle. That's like trying to buy it right there. Why would I buy this here? I wouldn't. I would buy it there. If I get the same behavior, why would I do something different here? Why wouldn't it come back out here? Well, I don't know. So, but that's not, see why there's no trade here for me? Otherwise, there'd be a trade here. Does that make sense? Yeah, and by the way, the link in the bottom of YouTube, please give a thumb up, by the way, guys, if you're getting something out of this here. Remember, our targets are up above 70% probability. Past performance, not indicative of future results. You got to vet them. And my orientation all day has been long, except for the shorts in the morning to get long. So and it'll turn you upside down. It really will. Trading will do that because you'll get confused. So the thing is, having trade plans where the plan's already laid out, and then it's following the plan. It's no different than a pilot following a route. And I use conditional narrative statements. If this, then that. If not, then what? If it comes out here, so if this, then what? Then that. If it comes below here, then what? Then this. If this is too low, then what? Then back here. Then what? Back here. If it doesn't take this out, then what? Back here. If it comes back here, then what? Out here. If it doesn't come out there, then what? If I don't get under here, then back here. No trade. Then what? Either bounce off of here, come back here, take the stops. If not, then what? Then out the top. Am I okay with that? Yep. If you put this trade on, you took your scale and you hung out, you would not do anything. Your stop would be here, and you'd ride through this, accepting that you would scratch the trade. Now that this has happened, you could pull your stop. Up to you and your plan. What I do is I put something like this on and I just sit back. If I have confidence in the structure. So gap to settle. But these are 70% probabilities. I like 70% probability. Market never has to go there, But guess what? It's not even 12 noon yet. I got all day. And the market is short. If the market is short, then what? Who becomes the buyers? The shorts. So we can still be rotational and it's still working. So it's not broke. Don't fix it. Thumb up in YouTube. If you're visiting, remember on Monday, I'll be trading in September. We're doing rollover. Straighten your data out. Make sure if you have levels, whether you're in the Bookmap Discord TraderLab chat, get everything aligned with your higher time frame levels. The market is an auction. Doesn't care about the price. The behavior is generic. So it's going to do the same thing. Whatever it's doing here, it's going to do Monday. Does it every day because this is how the market figure out pricing and value. The only way it does it is an auction. That's why the market moves up and down. What do I see here? Liquidity, sellers, absorption. What does that suggest? Potential return here. And then what? Maybe back down here. This is rotational trading. It's nightmarish. And it is only because you got to decide before you're in this what your plan. In other words, the plan is not made up here. The plan is all done, and this is what we do in TraderLab, outside of RTH hours. It's all done. It's like you're coming to work, which is trading. It's a job. It's not a video game. It's a job. And now you have your plan in your attempt to get an alignment. And when the plan or the condition of the market, I say, changes, you change your plan. If we're still in mean reversion, you're in a mean reversion plan. If we break out and run, you're going here. If we run into our sellers, you can anticipate rotation. Same thing that happened here. That was a short for mean reversion, except for me, it was an exit. Or I'm sitting out here and I'm not doing anything. But look what's going on. Mean reversion trading. Separate plan. Are you interested in trade plans and understanding market mechanics, how the market works, why it is? Do you understand why the market's doing this? Are you trading the market like a one-size-fits-all? Because that's kind of what we do, plug and play. Oh, my stochastic crossover, my Fibonacci is doing whatever. I got this retracement, all the good stuff. My RSI is doing this or doing that. My Elliott wave, it doesn't matter, It's all the same. It's all derivative, Oscillators, RSIs, all that's been around since, dawn of technical analysis from Wells Wilder. It's all been gone through by everybody who's walked in your shoes. I'm going to suggest that maybe you learn from your own experience and the experience of everybody who's attempted to have a career in this business and kind of think not only what works, but what doesn't work. One of the indications and what made the light bulb go off for me, and so I had to change everything, is I grew up when technical analysis, other than regular charting patterns and stuff, became available. I started in 1980, so we were just at that time had terminals and dumb. We call, they were dumb, and they really were. And then we got things like there was no volume, there was no order, there was nothing. No DOMs, no nothing. You pick up a phone, call your guy on the floor. That was it. Nothing. So, so early on, and I shared an office with George Lane. He created stochastics, so that's an early oscillator. I thought the Holy Grail showed up because this thing would work. So then I went down indicator world, and then built trading systems in hybrids of multiple indicators and things over a number of years. And I was managing money, so it was optimization, walk forward testing, all this kind of stuff, which is basically curve fitting on steroids. And it kept breaking down. So I was always continually grabbing data, looking back and walking forward, and then thinking that now I would have my statistics would hold up. They continually broke down. So it didn't work. And I coined a phrase, Trader Groundhog Day, because I kept doing the same thing, thinking that all I had to do was get it better, make it right. And I didn't understand that I was in a gaming business. I thought I was in a tweaking, tuning business and fixing business, that it only was persistence, because the gamblers get random outcomes also, and they take cash. I was taking cash out of the market, but it was always breaking down, and I was giving it back. And I kept seeing this volatility and a degradation. The problem was I was looking backwards to look forward. How does that process work on a day like today? Is today yesterday or the day before? No. Is it last week? It is not. So it was very hard for me to let go of the years I spent in indicator world, because I wanted to justify that. What's the saying? Yeah, at least I got something out of it. Well, what I got out of it was inconsistency and waking up doing the same thing, believing I was on the right track, and it was just be persistent. You got to be tough. You got to, keep sticking to it. You'll get it. What I got was the same thing over time, in spite of the aha moments. How many times have you gotten excited and think, I got it now? And you got it until you don't. Trader Groundhog Day. I did a webinar on it. So when I recognized this, and then I had a hard time saying maybe what I'm doing, my beliefs are not correct. How do you change a belief? Very hard, because you believe you're right. It's just persistence. Well, I had to change my thinking for me. And when I changed my thinking and removed every indicator, and I didn't do them all at once, because I really believed in them, must be something good in this. I'll keep some of them. Started removing them. And the more I removed the indicators, the more I reduced the conflict, and the more I saw I could measure it. And then I realized that I can't measure anything with random inputs. The casinos don't have random rules for blackjack. They extract dollars from the other participants. Why would I do it differently and think I could do it better? I changed everything, and everything changed for me. So that's why TraderLab exists, because most retail traders go down paths that are dead ends, and they don't know it. We all have a finite amount of time and capital. And in my opinion, the cost of education in this business is prohibitive. If you come to TraderLab, it may help you. It's not an answer, but it's a piece. And you will be in a community of like-minded traders. Our senior trader has over 50 years experience. I'm going on 45. And I got to tell you, I've got the tire marks on my back to prove it. Yet, in spite of it all, I've learned. And this is learnable. What you do with it is up to you. It's your time frame, the way you want to trade. This process works in all fractals and time frames. It is a generic process. So if you're interested in TraderLab, there's a link in the bottom of YouTube. I suggest you visit. The other part about TraderLab, it's a community of traders that leverage their collective experience. We're talking traders who've been in this for many, many years, have not been successful, up and down like everybody, like us, but now are profitable. We have other traders that have gone on, are now trading prop and are extracting profits where they were not profitable before. And we have other traders that no matter what they do, cannot manage their emotional states and will not be successful. We have that also. We have other traders who are looking for plug and play and just follow the leader. That's not TraderLab. TraderLab is here to help you become your own trader using methodology that you can develop confidence in and vet. In other words, find out where your edge is. Once you define an edge, it gives you the ability to take randomness and convert it into something tangible, like a metric. If you open a trade plan that you've already done the work on and you see the condition that matches the plan, now you're going to wait for the trade that has an edge. You're not going to activate emotionally over all these rotations. What you're going to be doing is waiting for your trade. And you'll be able to better manage your emotional state, which is still going to be there. You know, the fear and all the crazy things of the emotional triggering, you know, fight, flight, revenge trading, moving the stop, bailing out, not taking all the stuff, right? You'll manage it better because you'll now have something tangible called a statistic. The statistic tells you the only way to extract the dollars from the other side is to wait for your trade or your game, put the trade on when it shows up, when it fits the conditions, and accept the random outcome. If you have the ability to do that, and you can develop that ability if you choose in TraderLab, it's one trade at a time, one edge at a time, and learning that you can build a business if you are suited to dealing with the challenges that we all face, and not everybody is. Be sure to give a thumb up in YouTube if you find this interesting and you're curious. Don't take my word for it. Come to TraderLab. It's not what I do. What you'll find in TraderLab, there are traders trading this process in all different time frames, from scalpers, if that's your thing, to position traders. You can do this in any time frame, any fractal. You can trade ETFs, stocks, options, everything with a process that is fractal or time frame based. Microstructure inside of higher time frames. Fractals. If you're position trading, well, you'd be long from much lower because this thing has been long from way down. This was, I think, the last area. I don't remember where they are, but these are long areas. And this is the gap fill down here. We haven't gotten into the gap. We didn't get the ETH low, which is news-based. What does that tell you? This is what it tells me. And subject to maybe even an all-time high or maybe not. Doesn't matter to me. It could happen today. It may never happen. Guess what? Not my job. My job is to trade towards this. That's as deep as this gets. Now, you guys have the levels. Yesterday's settlement and the naked volume point of control, which was the retail price around 38-ish. Write them down and then click the link in the bottom of YouTube and give a thumb up on your way out. By the way, here's the 60 PDFs. And remember, these streams are available exclusively to Bookmap Discord TraderLab chat participants to reverse engineer, screenshot, circles, arrows, and compare to what you did today. And there is no perfect approach. If you're allergic to losses, then you can't be in business, because in our business, losses are overhead and costs of production. There's no business that doesn't pay bills and stay in business. And the casinos pay their bills. They pay the gamblers. They give you the cocktails. They give you the ticket to the buffet and maybe tickets to Adele. How can they afford to do that? Because they have an edge. They only play games that have an edge. They don't make them up. They just do their thing. And if it works for them, come to TraderLab and see if it can work for you. Thanks, guys. Please give a thumb up. Use the link in the bottom of YouTube. It's no cost, by the way, to come to TraderLab, be part of that community, and take advantage of all the additional education that's available in the TraderLab and the Bookmap Discord server. Stocks, options, crypto, algorithmic behavior, order flow with a high-tier tool like Bookmap, and a lot more. Additional trader education, Bookmap Academy, where you could actually get mentored, plus the TraderLab, where there's additional support, education, and I do drop in and do audio chats and updates and post in the Bookmap Discord TraderLab community. And the TraderLab community isn't just there for the community, it's there for everybody. Come to TraderLab, ask the TraderLab community, what would they do differently? What impact has TraderLab and this process had on their trading? And if they were starting today, what would they do differently? And I'm going to ask you, what are you going to do differently if you're not getting the success you're looking for? Thumb up, please, on the way out in YouTube. Thanks again for visiting TraderLab. Look forward to seeing you guys next week. And remember, rollover. Be sure to roll over. We'll be trading the September contract on Monday.